RBI Governor Shaktikanta మాట్లాడుతున్నారు. చూద్దాం.
Rate reduction, etc. Whatever I had to say with regard to monetary policy, we have elaborately said it 2 days ago. So I don't want to add anything further with regard to the future course of monetary policy and with regard to the stance, with regard to the rates, because whatever we had to say, we have said. With regard to the deposits, as I mentioned, I think just before you came, that I don't know whether you were in by that time, interest rates by the banks, both in the lending side as well as deposit sides, both are completely deregulated. And it is now for the banks, you see, RBI, from RBI's point of view, we are highlighting this issue. It's a kind of a proactive caution to the banks, because what happens is there will always be some kind of a mismatch between deposit growth and credit growth. There will be some mismatch. Two questions arise. One is, what is the gap in the growth rate between deposits and loans? Second thing is, how persistent and how long it is going on. In our case, we have been witnessing about 300 to 400 basis points gap between deposits and credit growth. Deposits are lower. It has been observed for the last few months. So at the moment, our effort is to just highlight this point. It's a kind of a proactive cautioning for the bank managements that going forward, this may create structural issues with regard to liquidity management. As it stands today, we don't see a crisis or anything, but it has to be attended. It has to be dealt with by the individual banks. So if it goes on like this unattended, it can lead to a potential structural liquidity management issue. So it's a kind of a advanced cautioning of the banks. And in the last monetary policy statement, I have touched upon it, and we have said that banks with their wide branch network, they are expected to come out with innovative products and services to mobilize deposits. So we are constantly discussing this in our interaction with the private sector and public sector banks. We do discuss this issue at length, and as the finance minister mentioned, she also, I think, as far as I know, she has been discussing this issue in the finance minister's interaction with the bank management. So this is something which the banks will have to really respond.
If there is a case for intervention of the policy, that is, if you are presuming that deposit is the only thing which I have to promote. I want to promote every possible avenue in which people would want to invest.
You see, any policy initiative, we have deregulated, India has deregulated interest rates. Now, if you go back again to regulate interest rates, and whether in the credit side or deposit side, it can be very retrograde, going back on economic reforms. That is another angle.
Distorted.
And it will also distort the markets. That's absolutely right. It will distort the markets. And one thing which came up in our internal discussion, in fact, the Deputy Governor has been pointing it out, is that today the credit lending has become digital. So there is very fast growth in lending. Deposit mobilization is still in the physical mode. So there is a kind of a structural change which has happened in the economy. Banks will have to come out therefore with innovative approaches to mobilize deposits.
Sorry, this answer is becoming long, but it's fairly interesting for everybody, and therefore it's worth extending the conversation. See, it's right that the credit is going through the digital format, and collection of depositors